Today we look at the brewing toxicity in the stock market. It's chaotic, it's a mess, but it's being covered up by the majority of individuals who have been promised ever-increasing gains, more corporate profits. However, we look to the reality of our current scenario and wonder, how could the markets ever withstand the pressure they're currently under? You came here for the truth, so let me unveil that for you. Today we're going to look at the financial system. I'm going to show you the stock market. I'm going to show you currencies. I'm going to show you some other issues with taxation and governments and so much more. Let's begin by taking a look at the Dow Jones at the time of this recording. While the market is still open, we can see the Dow Jones has been playing around today and currently up 50 points. It is still down significantly from its peak in late January. The market has been volatile ever since. If we look at the VIX index, we don't get that picture, but just look at this. Statistically, is the second most volatile time frame that we've had. This period of time, not quite the whole year yet, but in this period of time, second most volatile outside of a bear market. That's significant. But it's not being addressed, not being looked at. All we do is look at a few things and cherry pick, and then of course never get the full picture. Well, it is important to always be looking in deeper, one level further and further and further, never stop. The stock market today is being supported by low interest rates and money printing, but as we see, the central banks around the world are starting to say, well, you know what, maybe we're going to start pulling back, and the Federal Reserve slightly has been pulling back, Japan silently has been pulling back, and then you have other markets around the world that are kind of just wait and see policy, but generally, this is supposed to be, tightening. We'll see where that goes. The market is definitely pricing that in already. They're saying, I'm just going to hold it here, just going to wait a little bit, maybe move my money into a little bit of more safer type investments here. We're going to judge it as time goes on. U.S. first quarter growth slowed more than estimated, weighted down by the weakest consumer spending in nearly 5 years. I was told consumer sentiment was at the highest levels in a long time, but now the spending, the sentiment to me doesn't mean much. I want to know how much they are spending. I want to know what they're spending it on, and I see here the weakest spending in nearly 5 years. So after all of those different programs ran out, cash for clunkers, the TARP bailout and everything else, that started to weaken and weaken and weaken, and we got to a very low point in that, and then things happened to turn around a little bit. But I'm noticing here that this type of statistic keeps on coming up. Growth appears to have since regained momentum on the back of a robust labor market. Sure, I don't know about that, but that's what they're saying. GDP increased at a 2% annual rate in January, but they wanted 2.2%, okay? So that 0.2%, they make it a big deal, but always they revise it down. They tell you this so that they can get that information pumping out there, and stocks can rise, but then they revise it down. Nobody pays attention to the revisions, but it's okay. Look at this. Debt for U.S. corporations tops $6 trillion. A huge $6.3 trillion in corporate debt should trouble Wall Street investors facing stricter rate environment even as the cash hoarding reaches a peak. And that's something that I've covered here before, of course, because as you're going to tighten, you're going to put a lot of pressure on those with debt. They say you should accumulate debt when debt is cheap. That's fine, but we are now reversing that phase. Debt had been getting cheaper since the financial crisis, cheaper and cheaper and cheaper. But today, that's starting to flip around. The average person doesn't believe it will happen, but of course, it will. This is very important here where I'm highlighting, and I'm going to talk about this, and just want to stress some issues here. Speculative grade borrowers have reached a new record low cash to debt ratio of just 12% in 2017. That's below the 14% reported in 2008 during the Great Recession. Okay, a new record low on the cash to debt ratio. We are seeing more leverage today than ever before, taking more risk than we did during the financial crisis, going to extremes at this point in time. And yet still, nobody wants to address the fragility. Well, as far as I'm concerned, we've seen enough statistics to prove that we are walking on very, very thin ice. And what happens when a currency loses all of its power, its purchasing power? What about when the market loses faith in it? And suddenly, it becomes worthless. Bloomberg has done this incredibly simple but incredibly genius way of calculating inflation. Because in Venezuela, they stopped doing the official calculations. So there are estimates out there, and there's something that Bloomberg has, which is called the Venezuelan Café con Leche Index. I've covered this here numerous times. Tracking hyperinflation, 1 cup of coffee at a time. This is a very smart way to do it, and I've always told everybody to take essentially a basket of goods that you buy regularly, something that you've been buying for 10, 20, 30, 40 years. So you would think, all right, I buy my cup of coffee. I remember in 1975, it used to cost, let's just say 25 cents, and now today it's $2, okay? So I can figure that out. And I could say, okay, well, I used to fill up gas in 1987 and it was this much. And my first home, it cost this much money, and that was about the average homes at the time in my area, and now they cost this much. Take all of these things, forget about their garbage. When I see people writing about inflation, telling me that they're not creating inflation out there, I have to think, really, what world do you live in? Perhaps you live in your parents' basement or something and you haven't been able to get out in the real world. And if that's the case, that's totally fine, by the way. I'm just trying to suggest that what are you doing out there that doesn't cost more money than it did 5, 10, 20 years ago? I really don't know. I really don't know. Maybe in some cases technology can become cheaper. But if you look at something, for example, like, I don't know, an iPhone, well, they always price it about the same. So maybe the older model, but that gets discontinued, it'll wipe itself out. So they find a way. Anyway, it doesn't matter. So take a basket of goods, of the things that you buy regularly, and start to price them out. And you think to yourself, well, actually the inflation rate is so much. So that currency is getting devalued. Now, the US dollar, as an example, maybe Canadian dollar, Australian, we look into different places in Europe, wherever, it doesn't matter. We have currencies that are devaluing at different rates. But no area is experiencing the kind of inflation today that Venezuela is. Venezuela hyperinflation index reaches the 1 million mark. 1 million. The annual inflation rate, 43,000%. This is completely ridiculous. Completely. And many people would say, well, it's, when you see it happening, you'll be able to realize it. And the truth is that they didn't. They didn't see it. Millions of people don't see it happening when they're right in the middle of it. They think to themselves, I've got my family, I've got my house, I've got my car, I've got my job, and although things aren't really working out, I'm hoping that tomorrow will be better, and then tomorrow is worse. And they get up the next day, but they have to make money for their family. They have to protect their family. They have to watch this and that. If they flee to somewhere else, it's not so easy, right? It's not that easy to just pick up and go. You can ask anybody who's had to immigrate from one country to another, particularly under unfortunate circumstances. It's not easy. Look at what has happened. This line here is the beginning of 2018, believe it or not. So I could look at all of this area right in here, okay? And that's going back, it's basically showing us 2016, 2017. To you, it looks like a straight line across, just starts to escalate right at the end there. But if I were to zoom in on 2016, 2017, it also shows a parabolic rise, but it's nothing compared to what is being experienced right now in 2018. Because it only gets worse. A parabolic rise continues to get more extreme. Unbelievable how far this has come in such a short period of time, something I continue to warn about. I've been showing you what's happening in Venezuela now for years, tracking the progress. I remember when the inflation rate they were showing us, it was around 100% and less. And they were estimating it's going to be 100%. Then the IMF came out, what was it, last year or the year before, and said maybe they're going to experience 720% inflation. And there was 1,300 or something like this. And now it's at 43,000% based on this one estimate. Don't go anywhere. Make sure you click on part 2 of this video. So much more to cover. Link is in the description. See you there.